All right. Welcome everyone. Put the chat up. You can drop something in the chat when you pop in, and we'll just wait a few minutes here to get started until we go live on all the different platforms. But in the meantime, those tuning in, drop a comment. Good morning, everyone. Thank you for tuning in early. Morning. Hope everybody had a great weekend, great productive weekend, and ready to come in and get it going on Monday. We'll go over the rates today, see where everything is at, and then we'll talk about this special topic of bank statement loans here today. But everybody just hang tight. We'll wait for everybody to have a chance to jump on, and we're still going live on a few platforms. All right, lots of people in the comments. Good morning. Good morning. Happy Monday. It's active Monday. Back to the grind. Okay, thank you everybody for watching. Like I said, we'll just wait one more minute here. Need to make sure we're live on all the platforms, give everybody a chance to tune in. And as you can see from the screen, today we're going to be talking about bank statements specifically, and it's going to be a great show. Definitely something that everybody's using nowadays and needs to have in their arsenal here. Good morning. All right, let's go ahead and get it started then. If you could go ahead and take the chat off there, Nick. Let's go ahead and get it started. So good morning, everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. What we're going to do today is do what we do every morning, which is go through the live rates for all the different programs. That includes conventional and non-QM programs. And today we're going to do a deep dive topic on one of the most popular non-QM programs, which are bank statement loans. And so it'll be nice to go through, see how the rates were last week and compare them to today, and then also talk specifically about bank statement loans. So with that being said, Nick, why don't we go ahead and pull up our pricing tool here and go through the rates for today.
All right, thank you, sir. So let me switch my screens, and I'm going to turn off the image, and we'll switch over to the pricing tool. So let me switch that up, make it nice and big. There we go. So this is our pricing tool for our team of mortgage professionals. So if you need a full detailed quote, a full loan estimate, please get with our team. We'll be happy to provide that. But this is going to show us the general rate indications for today. It is February 27th, just after 11 a.m. Eastern. So all of our standard programs are now published with live rates. So we're going to check out what we have today. We are going to go through a couple examples. We're going to start with our conforming conventional, and then we'll switch over to our FHA programs, which are usually the second best option. And then there are over 4,000 programs under our expanded guidelines for non-QM, including bank statement loans, which is our detailed topic for today. So we'll check out a couple of those options. We also obviously have VA available for our veterans that qualify. We appreciate your service, but since not everybody qualifies, we won't do that live. And same with USDA. Those are for rural properties only, so we won't do that live on today's demo. But let's set up our scenario for this morning. For all of our quotes, we're going to use the same scenario here. We're going to do an 80 loan to value, 80% LTV. That means 20% down payment. We're going to stick with a $400,000 loan amount, which is pretty standard there. We're going to look for a desired price of 99. What that means is we're going to try to find the best rate at a one discount point in cost. Most of our customers are buying down the rate a little bit in this market. And for all of our scenarios, we're going to do purchase, fixed, 30 years. Primary in this case, single family home, 1 unit. State of Florida, Miami-Dade County, that's where our office is based. And for all of our scenarios today, we will use 760 FICO and 40% estimated debt to income ratio. So let's click in here and check out what our conventional rates are today. This is a live tool, so I have to pass my security. And looks like it's about the same as it was. I believe this is exactly what it was on Friday when we ended, right? So not much action, it looks like, on the actual programs yet this morning. 6.875 rate for 1 discount point in cost. Looks like we have another option down here for 6.875 rate for 0.875 discount points. So that's a little better program there. And there's even one option here for 6.875 for 0.75 discount points. So that's probably the best program there, just a little slight variation on the program. So a lot of great options there for our conforming. And we love to watch the rates move. Hopefully we see some downward movement later this afternoon, and we will do the show again tomorrow and see what the markets have to say. For our next scenario, we always switch up to the typically next best option for most borrowers is going to be an FHA program. And actually last week, we just had some updates from the HUD that they're going to change the MI factor. So FHA is going to be awesome here. Here in a couple weeks, everybody will be able to access the new MI factors. We even have a couple programs that are available to already use the new MI factors. So a lot of great opportunities here with FHA. Let's check out the same scenario, ADLTV, purchase, 30-year fixed. Everything else will stay the same, but let's compare our FHA programs this morning. So it looks like the FHA is about the same as it was last week as well. So we have a couple options here for 6% rate for 0.625 in discount point cost. So it looks like that's about the best combo here at the top of the list. Remember, with FHA, there are additional costs for the monthly mortgage insurance and upfront mortgage insurance premiums. So always compare the APR over here. In this scenario, it's 6.894 when we include all of those costs. So always compare those apples to apples. And remember, in a few weeks here, these numbers will change as the monthly MI factor will be changing for these loans. Now, let's go back to our tool here and pull up the same scenario for our borrowers who are not, unfortunately, maybe not be able to qualify for conforming or FHA options. A lot of lenders or banks do not have other options. That's where we love to come in and specialize at the Mortgage Calculator. We have over 4,500 non-QM programs that come up under expanded guidelines. So tons of variations in order to help our borrowers who need a little extra help or maybe need a whole different program to qualify at all. We have tons of options. So we'll switch this to expanded guidelines, aka non-QM. We'll keep everything else the same for someone that's looking for a primary home. And you'll see we have some new options here under income verification. We can do full doc, alt doc. Let me scroll down a little bit so it goes down. Full doc, alt doc, asset related, which we do a couple shows on. We'll do that later. Bank statements, which is what we're going to talk about today and do a deep dive. So there's tons of bank statement options. Business bank statements, very popular for some of our self-employed people, 12 and 24 months. We also have our personal bank statement options, 12 and 24 months, which is what we'll go through. And then in a minute, we'll go over our investment property options, which pop up for our DSCR to no ratio, which are amazing. But for our pricing demo today, our most common non-QM scenario is going to be a personal bank statement 12-month program. And that's going to be for our self-employed borrowers. So typically, the people that need a little extra help to use alternative income documentation are our self-employed borrowers who, with their full 2-year tax return, maybe don't quite qualify for the home that they need. So we're going to actually look at their cash situation, actually get 12 months of their bank statements, and actually determine a debt-to-income ratio using those 12 months of bank statements. So that gives us a more detailed look into their actual cash situation and allows us to get them qualified typically for more home in most cases. So let's check out our non-QM bank statement rates this morning. And we'll see that these are a little bit higher than our conventional rates, but these are for borrowers who would not otherwise qualify. So the rates are right in the same range. We're in the high sixes for conventional, and you see here we're in the sevens, the mid to high sevens for non-QM. So a lot of great options that we have here. One of the best ones the computer found here was a 7.625 rate for 0.875 in discount point costs. So not much difference in rate there, and allows our borrowers, again, who would not otherwise qualify for the home that they want, to then qualify. So you'll see here we have dozens and dozens of options at different pricing. A lot of these programs may have some special things. Here's a little lower rate, 7.25 for one discount point. So you see there's just tons of different options here under these bank statement programs for our borrowers. So please get with our team. They'll navigate which one of these will work for your situation. We even have programs you might see at the higher rate because this program may allow things such as a credit event like a foreclosure or a bankruptcy or things like that. So a lot of flexibility we gain under the non-QM programs, not only to use the alternative documentation with bank statements, but also do things beyond that as well. So we love to work with these non-QM programs. Please get with our team so you can find which one will work best for you. Now, before we switch it over to Jose into a detailed look at a bunch of different bank statement examples with different LTVs and a little more complex scenarios, we'll switch this over to the investment properties. We always love to look at some investment property rates here in the morning. These are for our investors, whether it's your first investment property or your 100th investment property. We love to work with investors, and we have tons of options. So let's pull this up into a same scenario, 80% loan to value, 20% down payment, and we're going to compare our options for a investment property. So a lot of banks or lenders only have conforming options for the typical conventional programs, but we have those as well as our non-QM, thousands again of programs underneath the non-QM umbrella for our investors. So we'll quickly compare a conforming example to our non-QM examples. So we'll do a conforming purchase, 30-year fixed, everything else will stay the same. And let's check out what our investment properties are under conventional. So it looks here at the top of the list, you'll notice we have some decent rates, 7.125, but there are a significant cost now to these investment property loans under the conventional programs. They've added an additional penalty over the last year plus here for investment properties. So you won't see the computer find any options at one discount point in cost. This lowest or best combo was a 7.125 rate for 3.375 discount points. So unfortunately, we can't really raise the rate too much higher. Most of these conventional programs don't allow us to go higher on the rate in order to reduce the cost. So a lot of our investors are asking for other options. So these are great for investors that qualify full doc, want to take advantage of conventional rates here, but a lot of our investors have properties at cash flow and want other options, and that's where we love to present our non-QM options. So let's pull this last example up here, switch it to investment property. We'll do the same 80% loan to value, but we're going to switch to expanded guidelines, non-QM, and we'll see a couple options pop up now for our investment properties under non-QM. First, we'll see our income verification, so we can switch it from full doc to your tax return, which are conventional options. Now we have all of our non-QM, and our most popular by far is our investor DSCR program, and that's because it does not require any income verification at all from the borrower, no employment, no income verification. We're simply going to use the estimated property rental income in order to cover that mortgage payment, the PITIA of the mortgage, and determine typically that the rents will cover the mortgage payments. But we also have options for a lower than one ratio where the rents don't quite cover, and options for a better price, typically if the rents cover a significant amount, over 1.5 ratio. So a lot of options here under DSCR. That's where we really specialize here at the Mortgage Calculator. So we'll see some basic options, but please get with our team to go through all the different scenarios. And for our prepayment penalty, so all the non-QM investment options typically have a prepayment penalty. Of course, there's options to do zero prepayment here that'll cost a little bit more and limit our program options. So we're always going to price with a 3-year, which is the most standard option. We can even do a 5-year if we wanted to maybe hold the property for longer and we wanted to reduce the cost a little bit. But 3 years is pretty standard. So in order to get the most standard programs, we're always going to use 3 years for our examples here. Now let's check out what we have for our DSCR options. So looks like at the top of the stack here, we have an 8.125 rate for 0.975 in discount point cost. This is a great option. Please get with our team though, because there's a lot of different program standards here under the DSCR. You'll notice this one has a higher ratio, whereas some of these other ones may have a lower ratio for a little bit different price. So please get with our team. You see we have dozens and dozens of program options that vary. Again, some of these may allow things like credit events. Some of these may allow things like short-term rental income. So please get with our team. We have just dozens of options under every one of these non-QM program umbrellas. So we love to work with those investors. Also keep in mind, since we're not using personal employment or personal income, a lot of our investors can do multiple of these. So if you want to cash out multiple investment properties to purchase multiple more, we can start, a lot of our investors will start 2, 5, 10 of these DSCR loans at the same time in order to expand their portfolio. So we love to use these. They're a great tool for our investors. They also even go up to 85 LTV in some cases. So now that we've gone through the live scenario, let me go ahead and take my screen off. And I'm going to introduce Jose's topic for today, which if you didn't join us earlier, let me throw up the graphic. Today we're going to be talking about bank statement loans. So we did a quick example there of an 80 LTV scenario for a primary home, but Jose will go into a deep dive of when, why, and of course a couple of live examples of different LTVs, different scenarios, maybe investment versus primary. I'm not sure what you got cooked up here, Jose, but with 27 years of experience, Jose's done dozens of these loans and can really give us some insight in how it really operates when we're actually working with borrowers under these programs. So let me make you a little bit bigger here, Jose, and you can go ahead and take it over.
Awesome. Good morning, everybody. Thank you for joining us this morning for Daily Mortgage Rates Live with the Mortgage Calculator. Jose Gonzalez here, sales manager, 27 years experience, fully licensed as MLO and real estate agent since September of 1995. Actually got both licenses within 3 days apart of each other. Bank statements is the most popular non-QM option. Definitely gained popularity within the last 12, 13 months as we've been seeing this rate increase environment that we've been in. Many full doc borrowers, because bank statement is a full doc option, many traditional full doc borrowers saw their affordability decrease as the rate started increasing, and they had to think of alternative options to be able to still qualify for the homes which they so much still desire, albeit using different options, because the traditional full doc option, maybe they got pre-approved at 3% interest rate back in December of 2021, right? And then we all saw right after that, we started creeping up to where we are right now in the rates, which is probably double what we were then. So obviously the affordability has been affected. However, there are many self-employed borrowers, right? And self-employed borrowers have additional options, like bank statement, P&L, to name a few, right? So I'm not sure which one gives me more pleasure to go over, if it's bank statement or DSCR, because they're both outside the box ways of quantifying the income for these cases and being able to approve borrowers for purchases or refinances which they thought were out of their grasp. I've had many bank statement cases where when we're analyzing the tax returns, the income maybe comes up to whatever, $1,500, $2,000 a month, right? Because they're really taking every single write-off that they legally can take, right? However, the same borrower, I analyzed their last 12 months bank statements, and we can use business bank statements or personal bank statements depending which program option. Sometimes they even let us commingle both, right? So I've analyzed the same borrower and their income is $20,000 a month, and they can qualify for whatever property they so desire as long as they're comfortable making that payment, and as long as they can obviously make the payment. So big difference when you're looking at $2,000 a month versus $20,000 a month. Same borrower, same situation, same everything. The only thing is we are using one of our tools which in this case is one of our outside the box options, which is using bank statements to qualify, personal and or business. And it's really in the business bank statements where we really see the income really improve and increase as much, because you have a lot of businesses out there that are generating a lot of revenue. And then if you're the owner or part owner, we basically give you your proportionate share of your ownership. And then that is multiplied by whatever could be the expense factor that we're considering for that loan. Most of the scenarios have the default set at 50% expense ratio. Some options, depending on the business type, may adjust that up or down. And we can always try to adjust that with a third-party verification letter from the tax preparer, which would state what that particular business's expense factor is. For example, if you're a real estate agent, which we are self-employed as real estate agent. If you're a real estate agent, your expense factor is going to be very low. Why? Because you have very few expenses, unless you actually have overhead and staff and all these other stuff. Your expenses are going to be like your car, your gas, and your cell phone, and maybe some food and entertainment. So they know it's definitely not going to be 50% expense factor. So we did see a little bit of retrenchment in the bank statement loans when things got a little bit volatile, but everything is back at full force. We can go as high as 90% on these programs, 90% loan to value. And something very important to consider on the non-QM loans is that mortgage insurance is never applicable. So these rates that I'm going to be showing you here are, do not include any mortgage insurance. So when you're doing those internal your internal mental calculations, as I'm showing you my example, note that, typically MI on a loan amount of this size with a really high credit score, conventional loan, could be $70, $80, maybe $90 a month, around there. So take that into consideration when you're looking at the options. So in the first example that I have here for you, it is a primary purchase, 90% loan to value, right? Great rates. As I mentioned, we can use 12 or 24 months, personal or business bank statements, but we prefer 12 months because it's a lot easier, because you don't have to be keeping such a mindful eye on the deposit trends, because that's usually what affects bank statement loans, is if you have declining trends in the deposits. So look at these rates, right? Look at that, right? 8.5 is giving you a lender credit of $563. And in my example here, just to let you know, $500,000 purchase price, $50,000 down payment, and $450,000 loan amount. So I'll go back here because I have so many rates to offer that were off the table there. So 8.5 is the lowest cost option, but you can buy it down to as low as 7.375. Okay, so compare that to a 90% LTV conventional full doc with MI. You're probably going to be somewhere around there. As you saw, Nick was showing earlier the rates, and they were in the high sixes. 6.875. So that was best case option. So you're looking at very good options here. Primary purchase, 90% LTV. Now, you do need a 2-year self-employment history on this. Even though we're only looking at the last 12 months activity, you do need to have some type of a third-party verification that the borrower has been self-employed for at least the last 2 years in the same line of business. Doesn't have to be the same exact business, but the same line of business. He could have started as a sole proprietor, or now maybe they're an LLC or a corporation or something like that. So, but that can usually be documented with a third-party verification letter. So now we're going to go to investment. And here we have an 85% loan to value. That's only 15% down. For those of you looking for investment property options with a 15% down payment, here you go. Bank statement, 15% down. You got it right here. 8.99% is the lowest cost rate with the lowest option. And you can buy it down to as low as 8.499 and still have rates in compliance, right? So very good option here, folks. 15% down, bank statement, investment. This is a dream for most investors, right? They're here thinking they got to do, 20, 25% down hard money because they don't qualify full dog. That's where most people take this. You go to your typical MLO out there, or you go to one of the big box retail branches, and they're telling you, oh, no, you got to give 20% down, or you got to give 25% down. And you got to qualify, and you need tax returns, and you need this, and you need a whole laundry list of stuff. Well, Mortgage Calculator, we simplify that, and due to the fact that we have many more options, right? So 15% down, bank statement. This is with a 3-year prepay. You could add a 5-year prepay and probably lower the rate by another 1/8%. So now I'm going to show you the more traditional 20% down bank statement option, just so you could see how much better the rates get, right? Just to remind you now, this one here, 8.99 lowest cost rate, 8.499 lowest buy down rate option. So now here, totally different scenario. 8.125 gives you a lender credit of $1,000. 7.375 is your lowest buy down option. Now, that is, again, talking conventional interest rates here, but this is a bank statement option. So, mind blower, right? So now we're going to go to a cash out 12-month bank statement primary option. This is 85% loan to value. So again, same purchase, $500,000. So now 85% loan to value, primary cash out. Very good option, very high LTV here. No mortgage insurance, again, for any of these above 80.0% LTV options. Lowest buy down, lowest cost option, 8.75, and the lowest rate that you can buy down to 7.5%. So if you thought it couldn't get any better, we have 12 months bank statement investment cash out, 80% LTV, 3-year prepay, right? 80% cash out. You can't do that conventional, no matter if you got a 900 credit score and make $10 million a year. You just can't do it because it's not available, right? But here you go. At the Mortgage Calculator, we offer you 8.625 is your lowest cost option, and we're still down in the sevens on a cash out at 7.499. I mean, amazing rates. We have seen improvements in the rates in non-QM in the last month because the appetite in secondary for loans and packages has increased because, for the last year we were reduced, not we, but the industry, was basically transitioning over, figuring out what to do, but now they have a lot of money on their hands. So obviously they're loosening up the guidelines a little bit, bettering the rates so that they're starting to compete against each other for our business. And that's a good thing because we pass those savings on to all of our borrowers that can benefit from these amazing rates of 7.499 at a 80% loan to value investment cash out using bank statements. I mean, I don't know how you can include all of that in the same sentence and still have it be true, but it is. This is what we're doing, and you can see how happy it makes me to be able to offer these options to everybody out there. I truly enjoy when we can always be saying yes, 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 yes. Definitely makes it a lot more fun.
Absolutely. Thank you, Jose. All right. So appreciate everybody tuning in. We do this show at 11 a.m. Eastern time every weekday. So we go through the different rates like we just did today, and then we do a deep dive into a topic, which today we did bank statement loans. So if you're out there and you want to work with one of our loan officers, we can give you some actual quotes for actual scenarios that fit your needs. And you can go to themortgagecalculator.com and we can connect you with one of our 350 loan officers across the country. Maybe one of our loan officers already shared this video with you. That's great. Get with them and they will go ahead and get you lined up for any quotes that you would like to see within a couple of minutes. So as you can see here of Nick taking from the conventional rates going through, and you see the little fluctuation between the non-QM programs like the bank statement program, there are a lot of ins and outs to this and planning what you're going to do, right? So our loan officers at the Mortgage Calculator are trained to be a loan consultant and be able to walk you through all these different options that Nick went through, the different options that Jose went through, and a lot more, right? So contact us. You can send us an email, info@themortgagecalculator.com, or you can go to our website, themortgagecalculator.com, and we'll pair you up with one of our loan officer consultants. Thank you, everybody, for tuning in. We will see you tomorrow at 11 a.m. Eastern time. Thank you. Have a great day.